Good morning. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, bringing you the morning comment for the 28th of January. Fed stays on hold, monitoring global economy. The Fed remained on hold yesterday and expressed some concerns about the global financial turbulence. Officials took note of the recent global volatility by stating that they are closely monitoring global economic developments and they are assessing their implications for the labor market and inflation. The hints of concern among the FOMC members left market participants in doubt as whether the bank will take further action in March, pushing a bit down the probability of such an event. Overall, while the statement reflected the cautious tone investors expected by acknowledging the increased international risk, the FOMC did not rule out a hike at the March meeting. Any improvement in the US data going into the next meeting could bring forward expectations for the Fed to pull the trigger, especially as officials will have updated projections and forecasts to work with. Elsewhere, the Reserve Bank of New Zealand also kept interest rates unchanged yesterday, but signaled that further easing may be required over the year to ensure inflation moves towards its target range. The bank pushed back the date by which it expects inflation to hit its target, quoting a softening global economy, falling dairy prices, and lower fuel prices as the main contributors of this delay. The RBNZ also talked down the QE, stating that further depreciation in the currency is appropriate. If incoming data continue to show weakness, or if dairy and fuel prices continue falling, we could see expectations for the March rate cut to rise even more. The market currently assigns a probability higher than 50% of such an action at the next meeting, which could keep the New Zealand dollar under selling pressure in the coming weeks. As for today, during the European Day, the UK preliminary estimate of Q4 GDP is expected to show that the growth rate has increased to 0.5% quarter-on-quarter from 0.4% in the previous quarter. However, there are doubts over the performance of the British economy as manufacturing and construction PMIs have softened throughout the quarter, while retail sales were mixed. Industrial and construction outputs have also been soft, with November's reports revealing declines. A possible disappointment in the figure could push further back expectations for a rate hike from the Bank of England and could bring the pound under renewed selling pressure. Something like that would also confirm the recent comments by the Bank of England Governor Carney that now is not the time to raise rates. Having all this in mind and given the uncertainty surrounding the Brexit referendum, we believe that the bank could be reluctant to hike until there is a greater clarity on Britain's position within Europe. From Eurozone, the German flash CPI for January is forecast to have accelerated to 0.4% from 0.2% in December. As usual, we will look at the larger regions for a guidance on where the headline figure may come in, and thereby as an indication for the near-term direction of Euro. A rise in the inflation rate of Eurozone's growth engine could indicate a rise in the block CPI rate due to be released on Friday, and may support Euro at least temporarily. Eurozone's final consumer confidence for January is also coming out. Expectations are for the figure to show that the improvement in the preliminary print was short-lived, and instead confidence declined from the previous month. From the US, we get durable goods orders for December. Both the headline and core figures are forecast to have fallen after stagnating the previous month, mainly by shrinking demand for drilling equipment from energy producers as well as a stronger dollar, which makes exports less competitive. Moreover, the ISM manufacturing index for the same month slipped to its lowest level since 2009, increasing the possibilities for durable goods orders to decline as well. This could cause the greenback to weaken, at least temporarily. Initial jobless claims for the week ended on the 22nd of January are forecast to have decreased from the previous week. This would drive the 4-week moving average down as well. We also get the pending home sales for December, which are expected to have rebounded after falling in November. As for the speakers, we have only one speaker on Thursday's agenda. ECB Governing Council member James Widman speaks during the day. For more information including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade delivered directly to you. And also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, wishing you solid trading.